In the last 5 years, HP is up 18%. Year to date, it's up 8%. And during this past month, HP has been all over the news. HP stock falls, why short-term pain could mean long-term gains. HP Dell among firms that have applied to Indian incentive program. HP tumbles most in more than 3 years on tepid PC demand. PC sales still look dreary. Shares of HP fall 8% following revenue miss. So for the rest of this video, you'll see a bunch of stars at the top of the screen. A star will be added every time we have a good metric. The more stars, the better the business. Let's first look at HP's expected growth. Otherwise, what we can see and expect HP will do going forward. HP's next year's projections are decent at 5.8%, and the next 5 years looks like that growth stabilizes at negative 1.21%. That's pretty bad. No stars added. The price to sales ratio is at 0.56. That's a little lower than its 5-year average. We want it lower. That's good. The PE ratio is at 11.75, which is higher than the 5-year average. We also want that to be lower. That's a bad thing. The price to cash flow is at 10.85. It's higher than its 5-year. We want that ratio to be lower. That's bad. The price to book is unknown, so that's bad. And for the PEG ratio, we want that ratio to be above 1. We have no info on that, so that's bad. Noting that down, on this section we add only 1 star. Following that, let's look at HP's operating performance, specifically 6 key metrics that deal with HP's business health. The return on assets is at 7%, much lower than its 5-year average. We want that higher. That's bad. The return on equity is at 20.91%, higher than its 5-year. We again want that higher. That's good. The return on invested capital is at 9.01%, much higher than its 5-year. We want that higher. That's good. As for its key metrics, HP's gross margins looks very healthy at 20.2%, better than its 5-year average. That's good. The operating margins are at 7.89%, a little bit higher than its 5-year. That's good. And net margins is at 4.75%, which is lower than its 5-year, so that's bad. For this section, we add 4 stars. Next, let's look at HP's dividend metrics. Basically, if you're like me and put great importance on getting paid as a shareholder, you'll focus on these metrics. HP is pretty good since it pays $1.05 per share, translating to a 3.31% yield. That's good. Include its buyback yield at 6.08%, you've got an annual yield of 9.39%, which is good, but compared to its 5-year average, not good. When we look at the payout ratio, HP pays out 38.39% of its profits to shareholders, which is not great, and much higher than its 5-year average. That's bad. For this section, we add 2 more stars. Let's move on and look at HP's financial health by checking out its balance sheet during its most recent quarter. We see its assets at $36 billion, which is trending up. That's good. Liabilities at $39 billion, which is also trending up, but that's bad. Debt at $12 billion, which is trending up. Bad again. Equity is at negative $3 billion, which is trending down. That's bad. And cash holdings are at $1.4 billion, but it's trending down. Bad again. For this section, we add 1 more star. Looking at free cash flow, right now HP has low cash flow and it isn't getting better. That's bad. And finally, for this section, we don't add any stars. What I see from these key metrics, HP is below average, making it even worse with slowing PC sales and weak earnings. Next, we're going to look at HP's valuation, but if you stop watching here, you get an idea of what kind of company is this based on the metrics. And at this point, I wouldn't invest in HP solely on its business. Of course, the price can sway me either way, but just by looking at the business, I wouldn't buy it. Okay, now let's look at HP's stock and determine an optimal price point if you're interested in buying this stock. When we see price targets for HP, on the low end, we see it at $22 and the high end at $36, with the average fair price at $28.36 per share. Looking at the 6 most recent recommendations, all maintain a hold rating. Let's also include Graham's number, which is a valuation method popularized by Benjamin Graham, the father of value investing, and Warren Buffett's mentor. We include the book value at negative $2.52, earnings at $2.67, but the Graham number doesn't accept negative numbers, so we'll help the stock a little and put 1 cent for book value. So we get 78 cents per share, making HP incredibly expensive right now. But unlike analysts who can be too optimistic and Benjamin Graham who can be too conservative, there should be a middle ground, and that's my fair price for HP. But before we get to that, join my Patreon. You'll get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. We can probably all agree HP has different valuations for a rather poor company. But should you buy it at its current price? I give HP a fair price of $41.81 per share. Right now, the stock is just very undervalued, and you'll see that many long-term investors will think so as well. In the end, I give HP a final grade of 51 out of 99. Overall, an average company with okay fundamentals, and it helps that the price is quite undervalued right now. You can go for it, but you'll be middling around an average investment. Tell me what you think of HP. Invest wisely, and as always, take care of your money.